right, so let's go ahead and get started. This is going to be a webinar that's a little different from our usual topics. I'm going to be going over really some ways I've grown startups in the past. I think this could be helpful for really everyone, whether you're a buyer or a seller. Maybe you're looking to buy a startup and you do find one that you really like. Uh, I think I can give you some tips on how to grow that business. And then obviously, if you're looking to sell it, how to best position the business, how to maybe ignite some new growth channels. So I'm gonna go ahead and dive in. If you have any questions as I'm going through this, feel free to put them in the chat and I'll do my best to get to them towards the end. Okay, we're good to go. All right, this is From Idea to Exit, the realities of startup growth and valuation. For those of you that may not know me, my name is Andrew Gazdecki. I've helped thousands of founders get acquired through acquire.com. Before Acquire, I built and sold multiple different startups. I'm going to be going over that in a bit more detail, more than I usually share. What were the companies? How did I grow them? What happened with them? And then this webinar is just discussing, tactics I use for growth, how to think about landing your first customers and scaling without raising capital. So what you're going to learn today, how to start without funding, getting your first customers, why the first 10 customers matter the most. And then here's kind of some things that, I have really, I'd say, become really good at, or things that I like to really focus on. And I'll go over each of these in much more detail. But number one is going to be the importance of a short customer payback period. This used to be the number one metric I used to track at my first startup, which was a company called Business Apps. Number two, distribution over product innovation. I'm a big believer that distribution is how you build great products. You need customers to get feedback. Without their feedback, it's really hard to build a great product. And it just fuels this loop. So I'll talk about that and how I think about distribution and maybe some creative ways to create massive distribution and how I've done it in the past, which is number three, leverage creative distribution. Number four, build a strong brand story. When you're bootstrapping a startup, you generally don't have a lot of capital to invest in ads and stuff like that, paid ad campaigns. So I always say sell a great story if you can't afford ads. Stories is what really moves companies today, in my opinion. I think it's really always been this way, but with the rise of LinkedIn and Twitter and these platforms where you're able to share everything, you essentially have, immediate customer access, which wasn't available 10 years ago. I think if you don't have a strong brand story today, you're literally missing out on probably the strongest growth lever you can pull in your company. How to use free distribution relentlessly, just ways to think about that. And then consistency over brilliance. I think this is a big one. You can have the best marketing strategy, you can have the best product strategy, you can have, all the capital in the world, but if you're not, showing up every day, marketing your startup, selling to customers, really listening to them, scheduling calls, it's just going to be a slog. And that's really where you learn the most too, is just learning what works every single day, what doesn't work, applying that to your strategies. The biggest startup lie, you need funding to start. I think in Silicon Valley, there's a huge narrative of, you got to build $1 billion company. You should think of a great idea, raise a pre-seed round, stuff like that. I think that's all BS. I think there's a better way to build a business, and that starts with, really focusing on the first customers. I know you can't build a good business without customer focus. This is where you're going to learn essentially everything. How should you market to them? How should you sell to them? What problems do they have? What do they love about your product? What do they hate about your product? What do they think about your company? How much are they willing to pay? There's so much that you can unlock with customers. I know this is really basic advice, but I think it's good to just reiterate just the importance of the first customers and how they can lay the foundation for literally everything. Like one, real story is, my first startup Business Apps, it was a do-it-yourself mobile app platform for small businesses. Think like drag and drop Wix, but for mobile apps. Built a company about almost 15 years ago. I feel like I'm getting kind of old. But the original go-to-market strategy was to sell directly into small businesses, meaning we would cold call small businesses. This is in 2010 when the iPhone just came out. People would pick up and we'd say, hey, what's your mobile app strategy? And restaurants would say something like appetizer, like, what are you talking about? But anyways, there was, one of our first customers built these mobile apps for these beautiful Ramada hotels. And I thought, this individual owned the hotels. Long story short, I got on a call with this individual, learned how he was using the platform, learned more about his business. And he told me that he was essentially using the platform to build apps for his customers. He owned a marketing company for the hospitality industry across Switzerland, France, and Italy. And he basically just had an idea. He said, hey, if you white label this platform, meaning I remove our company's branding, apply his, it would allow him to sell a lot more mobile apps. And because, I was willing to hop on the call with him, really listen to him and implement his feedback, it completely changed the trajectory of the company. We went from selling one mobile app to essentially selling hundreds of mobile apps at a time with big partnership agreements. So the point there is, again, it's very basic advice, really focus on your customers, really, figure out their problems and how you can solve them. Because in my experience, it legitimately unlocked more growth within a company than I could have ever imagined. And it was all because, I connected with a customer and found a unique insight that I was not aware of when I originally started the company. Distribution over features, I think, when you think of some of the best companies, today, and this is going to be probably arguable, but, Microsoft with, Microsoft Teams compared to Slack, I think it's a good example of just how powerful distribution can be when you really have a marketing mindset and a sales mindset, just an overall revenue mindset to growing the business. Yes, there are startups that have amazing products and they sell themselves. But I like to think a business in just statistical probable odds where it's highly unlikely to build a product that's going to be groundbreaking and revolutionary. And I think it's much more probable to build a product in a market that's growing and applying massive distribution into that market. And that can be a great way to also improve your product as well. So it's win-win. And then swinging for a $5 million exit over swinging for $1 billion exit. I think as entrepreneurs, just being honest with ourselves in terms of asking ourselves, what do you want out of a startup? And I think a lot of times, when you set a goal of, a couple $1 million or 5 million or 10 million, whatever that number is, compared to $1 billion, you have a much higher chance of being successful. So let's continue. So building a strong brand. These are the three companies that I've started business apps. I discussed a little bit. We helped build mobile applications for small businesses. But what we really did at this company was I used to tell the team that we're not a product company, we're a distribution company. Someone's asking in the audience, what exactly you mean by distribution, Andrew? I mean the ability to connect with customers and sell the product at scale. So thinking of ways for you to deliver your product where you're not really limited by one-to-one sales calls or something like that, where you're able to essentially unlock growth within the company to sell your product way faster than your competition. So at Business Apps, we really focus on creating a brand narrative because at the time, publications were huge. This was when TechCrunch was in their heyday. If you got featured in TechCrunch, it was, they used to say you get tech crunched, where your surfers would get crunched. But we would say, as a small business, we allow you to compete with the larger companies and build a beautiful mobile app experience comparative to Starbucks down the street that could spend $15 million on their mobile app. And so we were democratizing mobile app development for small businesses. And that really resonated because we had small business owners say, I'd love to provide that customer experience for my customers, but I can't afford it. Or yes, my competition is able to provide these things. I should be able to as well. And I think the key point here as well is notice how there's no features being shared in that brand narrative. I'm not saying build a mobile loyalty food ordering system and send push notifications. I'm saying compete with, I'm really building a narrative and something that could invoke emotion. Allcoin was a company I started after Business Apps was acquired. It was a decentralized cryptocurrency exchange. And what we did was we championed a safer, more secure way to trade different cryptocurrencies. And this was during a time when a lot of the major exchanges were being hacked. So that really resonated with the cryptocurrency community. And again, really focusing on, the narrative rather than the small features and functionality. And then acquire a big thing that we do is we empower Bootstrap founders. I like to, really encourage entrepreneurs and, really basically share a different way of building businesses and help these entrepreneurs win. So when you have strong brand stories, this is really what customers will remember, and it can also differentiate your product, even if it's exactly the same. So something to maybe think about. I have some more slides further in this presentation on how to think about your brand story, because every company has one, every founder has one, every company has a starting founding story that you can think about, and then just getting comfortable sharing these stories over and over and over. So how business apps got started? This was a company I started in college. I essentially slept on a couch. I cold emailed businesses. Now, in between having a good product and starting the company, one thing I did was I offered to build mobile apps for clients on their behalf. And I think every single person in this audience, whether you're buying a company or you're looking to sell your company, this could be something to add into your business's service or product immediately. And what I mean by that is done for you services. So we had a drag and drop mobile app builder, but a lot of small business owners just wanted the mobile app. They didn't want to utilize the product. They didn't want to spend time learning how it works. And so just by offering to build the mobile app for them, where I would use the platform on their behalf and build the mobile application, sales skyrocketed as well because we were reducing friction, which increased revenue, which allowed us to continue to improve that product. So again, thinking of things like a flywheel where maybe a lot of customers aren't converting, maybe you have a lot of free users and they're really looking for the outcome that your product delivers, but maybe getting to that outcome is kind of difficult right now for one reason or another. And so offering or layering on a service component to your business could be something to consider. And then when we eventually moved over to the reseller model, and this is a main point I'd love to get across in this webinar, is the importance of a short customer payback period. There's a ton of different metrics that you need to track as a SaaS founder: annual recurring revenue, monthly recurring revenue, churn, customer LTV, all that fun stuff. But what customer payback period allows you to do is rapidly invest into the business. And what I mean by this is for our reseller program, it was a white label program. So we'd take this awesome mobile app building platform, we'd white label it. So you'd have, John's mobile app company as the logo. This would allow customers to sell mobile apps with their own branding to set their own price. And it would be $300 a month. And it would cost us roughly $290 to acquire this customer through paid marketing channels or organic marketing channels. And so by day 29, we were profitable on that customer and allowed us to rapidly invest back into the business through more paid ad campaigns, building out the team. And this allowed us to grow the company really quickly, as opposed to if the customer payback period was, say, 6 months or 8 months or 12 months or something like that, where we have to wait 12 months to be profitable from acquiring that customer. And if that's the case, you're probably going to grow pretty slow if you're bootstrapped, or you're going to need to raise capital and be venture backed. So something to think about. So every way we were attracting customers, we were trying to figure out ways to get that number down to rapidly invest in the business. So I went over a lot of these points, but again, I believe this to be the most important metric for bootstrap startups. Having a short payback period equals faster reinvestment in the business, which equals faster growth. If you have a long customer payback period, that means growth is going to be slow. It's also going to be a grind, or you're just going to need outside funding. If you don't get paid back fast, you're going to essentially be stuck, or you need to dilute and sell ownership to investors, which isn't necessarily a bad thing, but just understand what game are you playing and how are you able to pull on that growth lever. Payback period equals your lever for self-funded scaling. I 100% believe this. I think it's a very overlooked metric as well. If you don't know it, I would try to calculate it if you can, just to understand how efficient is your go-to-market engine. And again, at Business Apps, tracking payback period is how we scaled fast without raising a dime. We optimized everything around getting paid back quickly. We scaled this business to about 10 million in annual recurring revenue. We had customers all across the world. And again, this was because we were really efficient in how we attracted customers. And it really creates a flywheel. So this is what I'm trying to illustrate with this slide, where you start with one-on-one sales. This is where speed matters more than scale. You want to make it really easy for customers to pay you and sign up for the product, pay quickly. You want to have a clear value proposition, be really clear on who you're selling to. At this point, you don't want to have 10 different ICPs that you're targeting. You want to solve one use case for one type of customer very, very specifically. And if you do that correctly in a way that's efficient, you're going to have a low customer payback period, and you can fuel that into the business to have this flywheel move faster to where you can attract more customers and continue to scale your business faster than you would if it was a longer payback period. So notes on this, I'd say, the best way to think about it is try to have it under 90 days. 90 days, I think, is a great customer payback period. As it gets longer than that, again, it will hinder growth. And when it comes to distribution strategies, think of ones that are simple or, maybe different than what other competitors in the market are currently doing. At Business Apps, we saw a lot of one-to-one product-led growth strategies. And so by utilizing a reseller network, which was differentiated from the market, we essentially innovated on the distribution of the product. So if you can figure out, channels that really work for you, keep it simple and don't overcomplicate things. I think one thing that I see a lot of entrepreneurs doing incorrectly is they're trying to make everything work at once. And really in the beginning stages, just get good at one good distribution channel and become the best company in your market at that distribution channel. Upfront cash flow absolutely beats free trials. Free trials are actually going to cost you a little bit of capital, far less than it will, say, 10 years ago due to server costs going down by like 90%. But again, you want to be so focused on revenue because when you are, you can reinvest that into the business to rapidly grow. And that leads to the next point, which is you need revenue to fuel growth. And if you have no customer acquisition delay, that means you don't need to raise venture capital. And I think this is another point to make here. I see a lot of bootstrappers that build these interesting products. They're priced in ways that, if you just do the math, like it's $9 a month and, the customer payback period is 6 months or 9 months or 12 months. If you just do the math on that business, it's really not a good business to try and bootstrap and scale. And the reason for that is it's going to take a lot of customers. Your payback period is too slow. And because of that, it's going to take too long without capital. And so I think that leads to a lot of situations where you see the business doesn't perform to the founder's original expectations. When if you take a step back and you just, think of this from a math equation, if you want to get to $1 million in revenue, it's probably easy if you start, at $50 or $100 a month. Business Apps was $300 a month. You're able to acquire customers at this price point so you can reinvest the capital to acquire more customers. And then the math equation to get to $1 million in revenue starts becoming a lot more realistic than, I can't do the math off the top of my head, but to get to $1 million in revenue off $9 a month per customer when it's going to cost you, $200 to acquire that customer, it's going to be a slog. So just something to think about. That's literally, the main way I thought about scaling Business Apps when I was running that company. And then again, distribution trumps product innovation. I believe at Business Apps, we had a pretty mediocre product, but every business needed a mobile app. And so it wasn't necessarily about having the top 1 to 2 features. It was really just about having an okay product that was able to be delivered to small businesses in a way that was more aggressive than our competitors. And what I really thought was interesting about the reseller model was it allowed us to essentially have an in-person sales approach to millions of small businesses all across the globe without having to have any heavy upfront costs. And then we were actually paid by these resellers upfront to begin working with them. So other ideas here could be, think of distribution strategies with a lot of leverage and don't cost you any capital, so organic strategies. So today what I would look at is, social strategies like LinkedIn or Twitter, or creating a YouTube channel or a TikTok channel. I think these are all high leverage opportunities for every startup today. I think if you look at your product or service you're offering today, you could definitely map out a few competitors that are absolutely killing it on those channels, and just learning from them and how they're currently doing it, I think is a great strategy. And then you might be asking, like, how did I think of a white label approach? How do we perfect it? How do we learn from it? I mean, one thing I did was I just looked at other companies with a similar strategy in a different market. Another strategy to think of could be referrals. Do you have customers that are willing to recommend your product or service to their friends? That is another way to unlock exponential growth without really adjusting the product too much. So, my point here is you can really figure out ways to innovate on your distribution strategy as well as your product strategy. It could be adding ways for people to share the product as they're using it. And the third point here, altcoin, we had a really interesting customer acquisition strategy for this company as well, where we had a campaign where if you referred a friend, you would get a percentage of their trades on the exchange. And it actually became the number one referral program ever launched with the company that we were working with. I can't remember the product. It might be Referral Labs. But we basically had a giant wait list that said, hey, invite your friends. And we built up all this momentum. This is just another example of really thinking about distribution as being more important or as important as your product. And in my opinion, it is far more important because it can really make a company great. So think of creative ways to, acquire customers, because every market has them. If you look at the competitors that are absolutely winning in every single market, they're generally acquiring customers in unique, creative ways, either through interesting marketing campaigns that make them stand out. They're activating their existing customers and finding ways for them to sell on their behalf. Or they have, partner programs, referral programs, ways that allow them to, another thing I'll add as I'm thinking about it. So Google has a lot of alumni creating startups. And if you look at the alumni from PayPal, the PayPal companies are far more successful because at PayPal, they fundamentally thought of distribution as an important part of the product, and they built virality into every product that they built at PayPal. So as people worked at PayPal and they left to start their own companies, all of them thought about, how do we get this in the hands of customers in unique ways? And their companies became way more successful than the Google alumni. Because at Google, they had so much built-in usage and distribution, they never really had to think through, how are we going to get customers for this product? Because if you launch a new product at Google, you have millions and millions of users right at your fingertips. So they never really built that muscle or built that thought process as you're building the company. So if anyone wants to Google that, it's really, really interesting. But again, distribution is really important. Use free distribution relentlessly. One simple strategy, just post on LinkedIn and Twitter. If you guys have seen me on there, you probably see I post literally every single day. And the way that I do this is really simple. I found a way where I enjoy posting on these platforms. And when you enjoy posting on the platforms, you'll be consistent. And when you're consistent, you're going to become really good at it. And then when you're really good at it, you're going to enjoy it. And then just it fuels kind of like that flywheel. And today, 10 years ago, these platforms weren't really that popular. LinkedIn is still kind of a mess, but 10 years ago it was a bigger mess. So leverage these, absolutely leverage these. Every single person on this webinar should 100% have a content strategy today. You should have a brand narrative. You should have a unique perspective on your market. It doesn't cost you anything. It can lower your customer acquisition cost. I've heard of countless startups acquiring their first, million in revenue from LinkedIn and Twitter alone. So if you just have no ideas on how to attract customers, how to grow your startup, or you're looking to buy a company and you're thinking about new ways to grow it, have a content strategy on Twitter and LinkedIn. And notice I only put Twitter and LinkedIn. I don't put LinkedIn, Twitter, YouTube, TikTok, every platform. Maybe you're better on video. Maybe you're better with written content. I prefer written content, so whichever one you prefer. But social platforms today and having a brand narrative is really how customers get to know you and learn about your product and service. And again, it's a free channel. 100% use it. First 10 customers are everything. Turn happy customers into your sales team. Talk to them weekly, get raw feedback, improve fast, ask for testimonials and referrals early. The third point is a big one. Build your brand. When customers, before a customer, I think the stat is 80% of customers will actually Google XYZ company reviews before using your product or service. So understanding that and being prepared for that. So having Trustpilot reviews, G2 Crowd, Capterra, asking customers to write a testimonial on your behalf. And it doesn't have to be a lot, but just so you show up and people are saying positive things about your brand is huge, because customers are searching you there. So that's what I call, closing the credibility gap, because in the beginning, really customers aren't going to trust you. You don't have any reputation in the market yet. You haven't essentially proven yourself. There's no one that can vouch for your product or service. So as you get those first customers, treat them incredibly well. Even if you have to give them discounts or roll out the red carpet or set everything up for them, do everything you can to retain them, because just their testimonial or their review alone will be 100% worth it, because you can leverage that to acquire more customers and really start building your brand. Another idea too here is, these customers, you can think of them really as your sales team, where they are the ones that are going to be spreading the word and telling their friends. This is really where you can, start adding a little bit of, distribution into happy customers as well. So moving over into storytelling. So every company I built, I take a step back and I think, what is a message that I think this company could stand for? David Sachs has a great blog post. I believe it's titled "Every Startup Should Be a Movement." It is one of the best blog posts I've ever read. And it describes something similar, where every company should really stand for something way beyond just what their product is, and have a narrative that customers can really rally behind. So here's a framework and how to think about that and how I've always done it. So you want to identify a market shift. You want to reinforce a theme that people believe in, potentially create a category if you can, and then start a movement your customers want to join. So at Business Apps, the shift was customers were moving from desktop computers to mobile computers. The category was mobile app development. Reinforcing a theme would be small businesses. Small businesses are better than big corporate businesses. And then a movement would be, around that would be, really marketing to where your customers are, and that's on their mobile devices. So that was a big shift, and there's a lot of ways to take that. You can play around with it, you can test it, but I think this is a really good framework to think about. Why should customers care, and what can you do to really stand out? Because there is a lot of startups today. There's more than ever. There's more products. There's more services. There's more stories. So the more that you can do to have something that cuts through the noise, the better. And then the quote, "The best startups don't sell products, they tell stories." I'm a firm believer of this, especially in today's day and age, as things become easier to build. This could really be your moat. This could be, your brand, your distribution, things that really cut through the noise when everything starts to feel similar. Find your founding story. So these are just some questions to maybe ask yourself. Again, this is for the person that doesn't have a story. Maybe you're not sure where to start. Your founding story is a great one. Like at Business Apps, both my parents were small business owners. I truly believe small businesses are the bedback of, the American economy. Just starting there, where did the idea come from? What problem pissed you off enough to solve it? What was hard? What did you have to overcome? So your story is over there. You just need to pull it out. You need to document it, write it down, share it with others, and see what resonates. See what part of it really gets people excited, or at least gets them listening. And then make it personal and relate it. You can tell this from the customer's point of view, meaning at Business Apps, we would say, do you want to compete with your larger competitors down the street that are essentially stealing customers away from your business? Show the pain, not just the product. Again, an example would be at Business Apps. We'd say, hey, you're losing customers to Starbucks down the street that can provide this awesome mobile experience to their customers. And then finding the Goliath, you're fighting for them. So again, giving customers a reason to rally behind your company, especially in the early days, because they're taking a bet on you. So getting them excited and letting them know why you exist, I think, is hugely important. People don't remember features, they remember why you built it. Evoke emotion. Emotion drives memory. Use it on purpose. Great stories make people feel seen. Choose your emotional anchor: anger, hope, pride, fear. Again, you want to pull out some sort of emotion. There's a ton of different ones you can choose. It could be excitement. It could be pride. It could be fear. I don't recommend fear, but some companies do. If you see those, what was the company? I think it was a virus protection company. They'd say like, hey, you're going to lose everything if you don't use this virus protection. I don't recommend that, but again, you can really, evoke emotion and make customers feel something, because when they feel something, they're going to remember it. You can back it up with user stories and metrics to really make it the truth and something real. Always utilize customer stories, testimonials, reviews, metrics, as much as you can do to get customers to see it as real. Make it visual. Use images to make the abstract concrete. I don't know if you've seen the images, but it has the old way on the left and then the new way on the right, which really visualizes the old way of the problem that you're solving, because there's always an old way to solve whatever problem that your startup is solving. For mobile app development, it's, long development times, it's super expensive. You don't know what to build. The new way, it's really quick, it's cheap, it's easy, it's affordable. All those points really hit home. Visual simplify complexity instantly. People are visual learners. If your story can't fit in a picture, it's too complicated. There's 100% truth to that. You want your story to be very, very simple to understand. You can articulate it very easily. It's not confusing. So you also don't need to overthink it. I think for a lot of entrepreneurs, one exercise here could be to, really get your story down on paper and then put it through ChatGPT and say, just make it shorter. Just make it shorter. Because you just want, takeaway points that you don't have to, go through a whole page to understand what it is. So condensing all of this maybe into, okay, like that's cool, Andrew, but I'm here. What should I do? So here's like a business I would start today. Like this would be the starting point. I'm not really so much of an idea entrepreneur. I like to really map out from a math perspective, can this business scale to millions in revenue? If it can, I don't think I'd spend the time and energy, but I'd want to map out a business where, I could attract 250 mid-sized B2B customers, B2B meaning the main point here. And I guess one thing to know here is this is just me. There's so many different ways to build businesses. You can build businesses at different price points. But I think scaling is better with a model like this, where it's a B2B SaaS company. You're targeting something in, $100, $200 a month. The goal is to get to 50K in MRR. Clear value, looking for ways to save around 2,000 in operations. The initial go-to-market strategy is going to be content marketing, cold outbound, reaching out directly to clients, potential customers. Again, simple on paper, brutal in practice, but totally doable. I think SaaS businesses are just much more scalable as you're able to push up the price point. So another takeaway from this slide could be, if you look at your existing SaaS business today, is there an opportunity to increase your price? Even if it's from 10 to 20, if it's 20 to 40 or 40 to 80, maybe you can layer on the service component that I mentioned earlier, where you say, hey, for, an extra $20 a month, we'll take care of everything for you. It's going to be absolutely perfect. Do everything you can and test different pricing models to push that up. Because as you do, going from 10 to $20 a month, you can grow 100% faster. Pricing is the biggest growth lever that you can possibly pull on. And then if you're looking to acquire a startup, is there an opportunity to increase the prices as you acquire it? Because again, that can easily, have double the revenue potential. So I could probably do a whole nother webinar on pricing and how to think about that, and how do you roll out a pricing strategy and an update and all that fun stuff. But for someone just starting, or ways to think about their business, is there a way to increase your prices? How much are you saving customers? Is it clear the value that you're driving? And then I'd even go as far as, do you have a content marketing strategy? Now, moving over to the acquisition component. So now let's assume that we bootstrapped a great business. We really are focused on the customer payback period. We have, excellent distribution. How does this help me towards an exit? I followed all these tips, or I've already built an awesome business. So right at the top, buyers, they love bootstrap startups. And the reason behind it is because they're built so great. They're very efficient. They have, if there's no ad dependency, that means sustainable growth. Customer acquisition and LTV metrics are fantastic. Short payback period tends to mean faster buyer ROI. If your growth isn't paid for, it's definitely real. So when I went to go sell business apps, the process was difficult, which is, why I'm here and why I started acquire.com. But the metrics of the business really spoke for itself, where it was a profitable business. Our customer payback period was low. It was a good acquisition target. And because of this, we sold to a private equity firm, a financial buyer. A big part of the acquisition was a lot of just reviewing the financials. So as you think about building the business, and this is also why I keep going back to, the numbers in your business really matter, even at the very beginning, because at the end, they're going to matter just as much, or if not more. And they can really outline, what you're going to be able to sell your business for based on how much you're able to attract customers for, how much are they worth in the business, and how efficient are you in, in attracting these customers. As an example, on the other side, let's say everything you do is, sustained by paid ad campaigns. What happens when those ad campaigns become more expensive, or if they go away entirely? Does growth absolutely plummet because churn is also high? These are things that every buyer is going to look at and really puts into question the sustainability of the business. So just some things to think about as you're thinking about an exit as well. Metrics that sell, there's probably no surprises here, but recurring revenue, you want to have a high margin business with low churn. You want to document all your processes. I'm sure you've heard this repeatedly, but it really, really does matter. And all of these things will absolutely increase your valuation as you go to sell. You want to see if you can build a predictable inbound referral flow where customers are coming to your business without having to buy leads one way or another. Make your business easy to run, easy to buy, meaning think a new owner to step in. Would they be able to understand the business? Would revenue fall off a cliff? Is your business highly dependent on you as the owner? These are all things that you can start thinking about now. And the more that you're able to address them before going to market, again, the more offers you're going to receive, the higher valuation you're going to receive, the more successful your acquisition outcome is going to be. Exit story that converts. So again, as you're talking to a buyer, you want to be able to say things like, we grow without ads, partners drive our acquisition costs. Retention is really strong, our users stick around, we're profitable, lean, and growing steadily. All of these things give you so much leverage when you're selling your business. And these are the things that all buyers look for as well. It just means you're not selling hype. You're selling a machine that generates profit consistently. You have happy customers. It's a good business to acquire. And that's really the main thing to understand with acquisitions is all buyers are looking for good businesses with good metrics that won't essentially fall over when they buy the business. So the more you can de-risk an acquisition from a financial perspective, the more offers you're going to receive from buyers and the higher exit valuation as well. So TLDR, the quick wins here: start scrappy, stay profitable, do what you can to innovate on distribution as much as you innovate on your product strategy. If you can, post every day, ship often, talk to users. Again, all of that compounds. When you're able to post every day, you're able to ship new functionality often, talking to users and the insights you're able to gain. That's really, the foundation of a great business, in my opinion. Track your customer payback period relentlessly to scale. Keep building, keep going. You've got this 100%. And then as you think of, building to exit, I think another benefit of bootstrapping is, you do have so much optionality. Bootstrapping allows you to have optionality in the business. You can sell on your terms, not out of desperation, or you can keep it and essentially print cash for years. These are the best exits and the ones you don't need to take. Now, moving on to the last component, which is going to be valuation prep and go to market. So as you think about selling your business, the key question is always, how much is this potentially worth and how do I value the business? So questions here is, how much is my company worth? Do I need a banker or a broker? What do buyers actually look for? These are all questions that we help with at acquire.com. Every business is different in terms of the growth rate, the profitability, the market that it's in, the efficiency of the customer acquisition strategy. All of these things add up into a valuation with the buyer. Hard truths, valuation stage. Valuation is what the market bears, not your feelings. We work with a lot of founders that will hear, XYZ startup sold for, X amount, I should too. All of these things are great to consider, but you want to look at what is the market for your specific size company, rather than public company or venture-backed XYZ competitor. Buyers do deduct for product debt. If the product is old and there's a lot of bugs and things are going to need to be rebuilt, that is going to be factored into the valuation. A strategic buyer still wants a fair deal. This one is another topic I'm sure we could do a whole nother webinar on, but there's a reason why every buyer pays certain valuations. It's not because out of the goodness of their heart they want to offer a ridiculous valuation. So how you get there is a process, but understanding every single buyer wants a fair deal really is what bridges the gap and gets acquisitions done. Very rarely is an acquisition done where, the buyer had to pay some outrageous valuation. They were super upset about it. Most acquisitions are fair multiples, and both sides feel like it's a win-win. Tips for the valuation stage. These are things that you can do essentially today. Get a clean P&L. Like this side of the starting gate, there really is no process with buyers without a clean P&L. This is the first question every buyer is going to ask. If you don't have a bookkeeper or you have messy books, we can work with you and recast your P&L to get a clear picture and a clear snapshot of the financial health of your business. But if you don't have one, a bookkeeper, I definitely recommend working with one. It's a great investment towards the final exit valuation of your business. Use market data, benchmarks, acquire valuation tool. Really understand, what is your business worth based on what other people are saying, and then understand valuation gravity, where as your business moves up in size, the risk goes down, so your valuation can go up as well based on certain factors. So if you're ready to get acquired, again, instantly benchmark your valuation. You can access real buyer demand with us, get deal ready with support from people who've been there. We've helped thousands of founders get acquired at acquire.com. So if now is a good time for you to start thinking about an exit, feel free to reach out. We'd be happy to work with you and get you acquired. So I hope you all enjoyed this presentation. Again, it was a little different than the usual content. But I'll go ahead, I'll answer a few questions and then we'll wrap it up. What'd you all think about that? If I can get some feedback. I usually go over exit tips, so I hope that was helpful in terms of just ways that I think both buyers and sellers can scale businesses and really get a win-win out of either situation. Okay, when is the time to list on acquire.com? We feel ready, but we're considering waiting until September when more investors might be active after the summer holidays. Would love your thoughts. I think any time is a good time to list on acquire.com. You can always list and then speak with our team. We're happy to chat with you just to give you an opinion. But generally, we see a very active summer. It's not the same as, say, raising venture capital where everybody goes on vacation. Buyers are always looking for acquisition targets. So I think it could be a good time now, but I would recommend waiting if something material is going to happen in September in the business, meaning numbers should be better or you want to do some preparation, stuff like that. Is there a possibility for a tech stack to be acquired than a large revenue making company? So pre-revenue companies are generally pretty hard to find buyers for. Most buyers that we work with at acquire.com are going to be looking at the traction, is there product market fit, how happy are the customers, rather than just a product that you built. Can you explain more about how you guys help with valuation? So we look at what buyers are paying in our marketplace. So we have data across all the acquisitions that we facilitated. And so we just match that based on what we feel that your business would sell on our marketplace. What's your outlook on M&A market over the next 12 to 24 months? Well, I mean, we had a record month in June and we had a record month in May as well. So and then March too. So the last 3 months for us have been, the best months we ever had. We're coming off a record-breaking Q2. So my opinion on the outlook over the M&A market over the next 12, 24 months, I think it's a great time to look to sell your business, especially compared to the last 2 years. All right. Well, again, thank you all so much for joining the webinar. I appreciate you all. I hope you enjoyed it. And I hope to see you next time. We'll have another webinar announcement within the next 2 weeks. And in the meantime, wishing you all the best. Have a great 4th of July. And if we can help you in any way at acquire.com, feel free to reach out. Cheers, everybody.